Good evening, friends. Am I visible to all?
Yes, sir.
Yeah. The PPT which is I am sharing it with you, it is also visible to you?
Yes, sir.
Okay. So, shall we start today?
Yes, sir.
Yes,
Yes,
sir.
sir.
Okay. Welcome to the last session of miscellaneous insurance, and the most interesting and many of us think that this is a difficult subject to understand. But here are some of the slides which I am presenting you, and these liability insurance, though it is a hard subject, what we feel and what we think, but once we understood the subject in deep or in thorough, whatever are the questions asked in the examination, you will be able to give them the best of the answers. That is the correct answer to take the full marks. In miscellaneous insurance, out of 30 questions, majorly you may say around 15% or maybe 20% questions will be asked on liability section. So liability is very important section as per the examination point of view, as well as in your day-to-day office working. So we'll start with liability today. What is liability? The liability is nothing but the responsibility. A responsibility which owes to a one person, and that person is liable or responsible for any of the liability. Maybe it is a damage, it is injury to any other person for which he is responsible. So liability is nothing but responsibility. Now, how this responsibility comes in picture? There are two, generally the liability in terms of legal liability. So what is legal liability? Legal liability are the responsibilities and obligations. There are certain laws of the land. So when we are staying in India, as an Indian citizen, we are having certain responsibilities and obligations which are enforced by the law. There are certain acts, certain laws which are enforced, and we have to abide and we have to do our duties according to the law only. So these responsibilities and obligations, if one fail to carry out such type of responsibility, then the legal liability will come in picture. Legal liability, again, there are two types of legal liability. One is criminal liability. We are not, that means in our insurance parlance, criminal liability is not our subject. But what is criminal liability? Criminal liability, these are the certain lawful things which are being override, or these responsibilities are override, and some criminal activities are being done, and for which the punishment, the imprisonment, fines are imposed by the land law of land. So these are criminal liabilities. Criminal liabilities we are not dealing with, but we are dealing in civil liability. What are civil liability? Civil liabilities are those liabilities which are enforced by the law, wherein the responsibilities are not carried out as per law and certain liability is fixed. So these type of liabilities are for the payment of damages, or these damages are called as compensation. So here the word damages means a compensation. It is not actually a property damage or injury, but these are the payment towards the damage or payment of damages. That is a compensation. Now, statutory liability versus tort liability. Just first try to understand the meaning of certain terms, phrases, so that it will be better for you to understand. Statutory liability. What is statutory liability? Statutory liability means liability enforced by the law or the statute or the acts. What are those acts? It is described here. Some acts are described, like the WC Act, which is called as Employees Compensation Act, Motor Vehicle Act, Public Liability Act, Indian Steamship Acts, and there are number of acts. These acts are by the law, that is by the Indian government, and if any liability comes due to this statute, that is the act, then the liability or our insured person is liability to pay the compensation. But what is the compensation? The amount of compensation or amount of damages to be paid, those are also described by these acts. So like in our Employees Compensation Act, the minimum maximum amount of compensation is also described. Likewise, Motor Vehicle Act, for third party property damages, there are certain maximum amounts are specified, and for third party personal injury, the act says that it is unlimited, but it is fixed to the certain income parameters, age parameters, dependability parameters. So that means the liability, when a statutory liability comes, the payment of the compensation will be as per act, and the insured is liable to pay the compensation as per law, that is as per statute. Whereas in tort liability, what is tort? Tort is nothing but the common law. Tort is nothing but civil law. So tort liability is what? Tort liability will come when the payment of damages or the payment of compensation will be as per the common law judgments. There are certain judgments for certain specific liability. When the liability comes from any of the common law judgment, the previous judgments are taken into consideration while arriving at the compensation. Because we all know in civil law or in common law judgments, the payments are not fixed. The amount of compensation is not fixed, or you cannot arrive at the compensation by mere arithmetic calculation. There are certain law cases, certain judgments to be referred with while arriving at these type of liability. So these are two different type of liability. One is statutory and the other is tort liability. Liability insurance commonly classified as. Now, what is liability or what type of compensation paid under liability insurance? Under liability insurance, personal injury and death. Yes, when there is any personal injury or death occurs to a person, individual, then the liability will come in picture. Also, there may be a damage to the property. There may be a damage to house, there may be a damage to compound wall, there may be damage to a car, whatever. So when these type of properties are damaged and there is a liability towards insured person, then these type of damages are also paid under our liability insurance. Second one is financial liability. Now, what is the difference between financial liability and personal injury or property damage liability? The first one which I have described is the injury or death which is occurred to a third person, or the property is damaged by our insured person because of his negligence. Then these type of damages are paid. But wherein what is financial liability? Financial liabilities are actual liabilities which are incurred towards the professional duties which are given by our professionals. If the doctor is doing or performing certain operations, or maybe he is giving certain prescription for medicines, and if there is anything from which the liability occurs towards the doctor, then those doctors are liable to pay the financial thing, or those doctors are liable to pay the compensation. But here, apart from these doctors or directors and officers, they do certain duties, and while imparting the duties, if the negligence is proved, if the negligence of the doctors, the architect, directors or officer, if the negligence is proved in the court of law, then the financial liability will be imposed and they are liable to pay the compensation. So in turn, if those professionals are having the professional policies insured with the insurer, then in turn, the insurers are liable to pay those compensation. So this is actually liability insurance, what we deal in. And apart from all these statute liability or the tort liability, we are liable to pay for the damages. Now, principles of insurance and their applicability. See, in our insurance, we all know the principle of insurance: utmost good faith, insurable interest, indemnity, etc., etc. So here, the insurable interest is very interesting. Why it is interesting? Insurable interest, there are three actually parties involved here. The liability which is occurring, or the liability is towards a person who has injured who has suffered the injuries, and towards that injured person, the liability exists from our insured. And in turn, the insurance company is going to pay on behalf of the insured, but the amount of compensation will go to the injured person. So here, what is insurable interest? Existence of potential legal liability, and such potential legal liability must be subject matter. So here, what is the subject matter? Subject matter is potential legal liability, or the legal liability must exist. What is the meaning of legal liability must to be exist? Is the negligence of our insured while performing the duties, or while driving a vehicle, or whatever means of the way, the legal liability is to be established by negligence of our insured. Then only these legal liability will come in picture. So insurable interest, existence of potential legal liability, and such potential legal liability must be subject matter. Also, insured must bear legal relationships to the subject matter. That means whenever there is any legal liability in picture, the subject matter or the legal relationships to the subject matter has to exist. It's not like that I will give you one simple example. In motor vehicle, we all know the transfer of the vehicle is very important factor. But regarding third party, now the transfer of vehicle is also not in picture. If it is not transferred, then also the liability comes in picture. But the legal relationship has to be there. That means there has to be insurance policy if the insurance company is going to pay the claim. So legal relationships to the subject matter is the subject matter. When there is a legal relationship, the insured's fault or insured's negligence has to be existed. If there is no negligence, then there will not be any legal relationship to the subject matter. Liability claims, yes, these claims are paid to other than insured. Yes, that I have already explained to you. These claims are paid to the person who has suffered the injury, or the property damages of certain persons are being paid off, but these are paid on behalf of the insured. So there has to be a legal relationship to the subject matter. Then only the liability claims are payable. Subrogation, transfer of right of recovery. Insurers are having this right of recovery against the whatever claims are made, and insurance companies having this subrogation right. What is contribution? If there are more than one policy, insurer pays their own rateable share of loss. So in proportion, the losses will be paid if we find that there is more than one policy. So this is a principle of contribution. So in short term, the principle of insurance are as per our insurance principles only. But here the insurable interest is very important factor, wherein the liability claims are paid to other than insured, but those are paid on behalf of insured. Now, indemnity. What is indemnity in liability insurance? Generally, in all our insurance policies, we are dealing with the term sum insured. We are dealing with the term sum insured, but here in case of liability insurance, the concept of sum insured does not arise. But whatever amounts which are specified by the insured while proposing the insurance are called as limit of liability. Limit of liability or limit of indemnity, because the insured will specify you certain amount, that up to this amount he thinks or he proposes that if there is any loss, the insurance company will be responsible, and whatever loss comes, that will be under that limit. Whatever loss comes, though the losses will be up to that limit of liability only. So it is the duty or insured is to give you the amount of liability. It is not the insurance company to convey him that you should take this amount of liability. Why? Because there may be dispute afterwards, and the insured may come to you saying that the insurance company has proposed this type of limit of liability. No, here the limit of liability is to be chosen by the insured only. Now here AOA is to AOI. What is this AOA and AOI? These are the ratios. What are these ratios? Ratios, the abbreviation AOA means any one accident. And what is AOI? Any 1 year. Now, what is the difference between AOA and AOI? I will give you a simple example. When I have given you the ratios of 1:1, 1:2, 1:3, 1:4, it may be 1:5 also. It may go on, but still, in general terms of insurance, it is up to 1:4. So there is no actual ratio bearing things, like many insurance companies may tend to give 1:5 ratio also. So these are not actually fixed, but in general terms, from 1:1 to 1:4 are the common ratios of AOA to AOI. Now, what is this AOA and what is AOI? There are certain difference of opinion regarding this AOA and AOI, but I will explain you in detail. AOA meaning any one accident. So when limit of liability or liability proposal comes to you, say for example, public liability, non-industrial proposal comes to you, and the insured wants to have AOA, AOI ratio of 1:1. What is the meaning of this AOA is to AOI 1:1? That means, and if he is choosing 10 lakhs as the limit of liability, that means the policy is issued for limit of liability of rupees 10 lakh, ratio of AOA is to AOI as 1:1. So then if there is any liability claim, say of 5 lakhs of rupees, if there is any liability claim in that policy, insurance company is liable to pay 5 lakhs of rupees because any one accident limit of liability is 10 lakh. Please note, if the limit of liability chosen by the insured is 10 lakh and the ratio is 1:1, that means whatever liability comes up to 10 lakh in a single accident, it is covered. So here, when I'm giving you the example that 5 lakhs of rupees claim is there and insurance company is going to pay these 5 lakhs of rupees as limit of liability, the total 5 lakhs will be payable. What will happen to the next 5 lakhs? Because still 5 lakhs rupees is still remain for under this limit of liability. Suppose if the second claim comes within same year, say of 5 lakhs, whether it is payable or not, there are two thoughts. One thought says that once the payment of rupees 5 lakh is done and the ratio chosen is 1:1, the policy is over. No, it is not like that. 1:1 means only one accident is covered and 1:4 means 4 accidents are covered. This is not correct. When 1:1 ratio is chosen, the maximum AOI limit in a year is 10 lakh. So suppose if this 5 lakhs claim again comes within that particular year, that means a total liability is 10 lakh, then that those total 10 lakhs, that is 5 lakhs in the first claim and 5 lakhs in the second claim, it is paid. Now this policy is over. Now there will not be any payment of compensation or limit of liability is exhausted. This is in short a simple example which I have given to you. I will take another example wherein there is a liability of say 12 lakhs. There is an accident and the limit of liability or the liability comes to the insured as 12 lakhs. How much of the compensation or liability claim will be paid to the insured? From the insurance company, 10 lakhs will be paid. But once this 10 lakhs amount is paid, this policy, since he has taken the ratio of 1:1, the policy is now over. There will not be any compensation paid if there is any liability claim during the currency of the policy next onward. So this is one simple example for AOA is to AOI 1:1. Likewise, this 1:2, 1:3, 1:4.
Sir, excuse me.
Hello.
If someone has taken the liability for 10 lakhs, some insured is 10 lakhs, but
Yes.
it's being exhausted in one accident, can he increase that?
No, once the policy limit of liability is exhausted, the policy is over. There will not be any endorsement for addition of this liability amount. Then
Okay.
at the time of next renewal, we can issue the policy. Hello. Okay, so these are certain liability ratios: 1:1, 1:2, 1:3, 1:4.
Sir.
Yes, yes.
Sir, one more example of 1:2.
1:2, the same example I can give you. The sum insured or the limit of liability chosen as 10 lakh, the limit of liability chosen for AOA is 10 lakh, and AOY, since the ratio is 1:2, the AOY limit will comes to 20 lakhs. In simple arithmetic terms, once the AOA limit chosen as 10 lakh, the AOY limit is 20 lakh. Here you should try to understand, and you should know that the AOA limits are specified by the insured. The AOI limits are automatic. The AOA limits are specified by the insured, that whatever liability comes in any one accident, that only is the specification made by the insured. The ratio will be chosen also by the insured, wherein he will understand that during the any 1 year or during the currency of the policy, what will be the maximum liability which can be covered. So when we are discussing the ratio of 1:2 and AOA limit is 10 lakh, the AOI limit will be 20 lakhs. So here again, when we are taking the example of liability claim of 5 lakhs, yes, it is payable because AOA limit is 10 lakhs. Wherein 5 lakhs is exhausted if there is second claim of 5 lakhs. Yes, that is also to be paid because the limit of AOA is 10 lakh, whereas AOI limit is 20 lakh. So two claims in a year, each of 5 lakhs are paid because any one limit was below 10 lakhs. Again, what will be the limit of liability which will be retained during the currency of the policy after payment of these two claims? That will remain to 10 lakhs. Out of 20 lakhs, 10 lakhs are paid, 10 lakhs remain. Say, for example, if the third claim comes of 12 lakhs. Suppose if the third claim comes of 12 lakhs, naturally the AOA limit specified is 10 lakh. That means the insurer's liability at any one accident will be 10 lakh only. And the AOI limits which were still there, it is also 10 lakh. So 10 lakh can be paid. So these are, yes.
So as many claims can be entertained till AOY limit is attained.
Exactly.
Okay,
exactly. So AOI limits is the maximum limit, but from the insurer's point of view, he will give you the AOI limit only. AOI limit will be actual as per the ratio. Okay, now there may be many examples, and from your own end, you can very well describe or assess those situations. The ratios of AOI and AOI are provided in terms of amount and not in number of claims in a year. It is also specified here that it may happen that the number of claims are 4 only payable. If the ratio is 1:4, it is not correct. It is on the total, that is, the amounts are the AOI ratios are provided in terms of the amount. If you see the rating chart also, if 1:1 is the ratio on the AOI limit, there are certain rating factors, and after those rating factors, AOI will come in picture. But generally, all the rating factors are on AOA basis. Utmost good faith. Now, since we are on the principles of insurance for liability, utmost good faith is very important factor, because the proposal for liability are to be scrutinized thoroughly, and these are to be given for our valued customer. So complete proposal form with all answer. Utmost good faith here is very important, because while giving or while issuing the policy, we should know each and every aspect of the insured. Whether that construction is class 1 construction, if chemical factory is there, all the chemical preventive measures are being carried out or not. So these are very important factors to be considered while underwriting such type of proposals in liability. So material changes to inform insurers. This is very important point under this principle of utmost good faith. So material changes, suppose the chemical manufacturing unit is having goods manufacturing which are above 32 degrees centigrade or maybe more than that. That means as per our insurance terms, those are non-hazardous goods or some category goods are there. But if there are certain material changes and insured is having the goods or maybe certain chemicals which are stored there for utilization for the stock, and those materials are hazardous in nature. Hazardous means there may be below 32 degrees, 16 degrees or whatever, which the insured may require during the currency of the policy or during the tenure. So in that case, what will happen? There is material change. What is material change? The stock which is there in that insurance factory are the stocks which are non-hazardous or maybe the goods which are having flashpoint above 32 degrees centigrade. Wherein the insurance company is confirming that the liability which may occur will not be on a high degree. But when the material changes are there from the insurer's end, he has to inform the insurers, because if there are any claims afterwards for the liability and the material changes are not disclosed to the insurance company, then the claims will not be payable. That means though the liability will come to insured, insurance company will not be a party to it. So the material changes is very important factor in liability insurance. Tort, I have conveyed you, these are civil wrongs. What are the torts or civil wrong? Libel or libel. These are the damage to reputation of another person. हम ऐसे बोल सकते हैं manhani, defamation, these type of things are coming under this definition. So these are civil wrongs. Apart from whatever the liability comes, these libel or slander is same like libel, but those are verbal, whereas libel are publications or written. So these type of damages which will hamper the reputation of particular person or the industry as a whole, then what will happen? Their production or their market will come down. So in turn, they will lose the business, or if once their market reputation is damaged, there will be loss of business. So these are some of the civil wrongs or tort. Assault is bodily harm. Now here, tort and crime. What is the difference between tort and crime? There are certain phrases and under certain definitions, what is the meaning of tort and what is the meaning of crime, it is given. First of all, grounds. In tort, that is civil wrong. Civil wrong, tort is civil wrongdoing, crime is criminal wrongdoing. So this is a basic definition. Victim, in case of tort, that is civil wrong, individuals are the victims, whereas in crime, a society as a whole is victim. Examples in tort are defamation, assault, or battery. These are certain examples regards to the tort, that is civil wrong. But in case of crime, the society is a victim, so the whole of the society will be affected. Say by murder, if there is any murder in certain locality, the whole of the society will be under threat, or there may be curfew imposed, or there may be certain things imposed by the law. So whole of the society will be the victimized, or those are the victim. Likewise, in burglary, it may happen that there will be threat to nearby homes or houses or nearby factory, that due to this burglary, they may also get such type of burglary in the future. So the society is victimized. So these are certain examples. Initiating party in a tort.
Excuse me, sir.
Yes.
Meaning of battery?
Battery is related to, it's like assault only. Battery is like assault only.
Okay.
Okay. Initiating party in tort or civil wrong is victim. So that particular victim will be initiating the civil wrong against the insured. But whereas in crime, the state, the law, the statute, they will come in picture. So when we are reading the newspaper, or maybe the news says that the Maharashtra state is filing a case against so and so. So those are the state authorities. They are filing or initiating parties where the crime has occurred and against those criminals. The action taken is the under tort or civil wrong. What is the action taken? These are the suits which are in the court of law. The damages or the compensation in money will be paid, whereas under crime, prosecution by the state. Definitely those will be punished, or those may be prosecuted and may be imprisoned by the state authorities. Purpose here in tort, the compensation will be payable to the injured. The compensation will be payable to the the legal hires of any of the death occurs during that if the liability comes. So these are the compensation which are payable to the injured person. Whereas in crime, no such type of compensations are payable, but there will be punishment to the criminal, so that this type of crime will not occur in future by those persons. So there are certain laws wherein the punishment is to be imposed to the criminals. So these are the purposes. Here tort, the compensation is awarded. The compensation is paid to the injured. Law under tort, as I told you, common law. Previous judgments or previous references are made, and accordingly the compensation or the award is given to the injured person. Whereas in crime, yes, there are fixed statute under IPC. There are certain sections. Under those sections, the punishment is given. Standard of proof. The standard of proof in case of tort is balance of probabilities. What is this balance of probabilities? That means there are certain probabilities till the end of the life of that particular injured person, and those balance of probabilities are counted. They are numericalized, and after that the compensation is awarded. So the standard of proof is given as per the balance of the probabilities in case of tort. Whereas in case of crime, beyond all reasonable doubt. Here, whenever there is happening of crime and the punishment is imposed to any of the criminal, there will not be, or there should not exist any doubt that the whatever is punishment given to that particular criminal is correct and it is fixed. So there should not be any doubt, and beyond all reasonable doubt, the crime is established and the punishment is given. Whereas in tort, the balance of probabilities are there. It may happen that after giving the compensation also, the particular injured person or the legal heirs, they will say, or they may find that whatever amount of compensation paid are not justified. It may happen, but still those are paid as per the references of the common law and according to the balance of probabilities, because those are not fixed as per the law or as per the statute. Now, classification of persons.
Excuse me, sir.
What are, yes?
सर कोई टाइम लिमिट भी होता है इनका फाइलिंग के लिए?
Yes,
under
yes,
tort
there,
and crime.
Yes, there are certain time limits. In the next slides, we will come to know the time limits, like the consumer forum cases or these type of cases that we will deal in.
Okay, sir.
Now, classification of persons. What are the classification of persons? It is given in the slide. These are certain classification which you ought to know. What are those? Trespassers, person entering without permission. The persons who are entering without permission are trespassers. So one cannot move into other body or anybody's home without having the permission of that particular house owner. So if it is so, those are trespassers. So if at all the trespassers are coming or in a particular home without any permission, if any liability comes to these trespassers, it is not payable, or the homeowner or house owner is not liable to pay such type of liability or compensation because the trespassers have arrived without the permission of that homeowner or house owner. What are the licensee? Licensee are the person entering with permission. Persons entering with permission may be having a permission in writing, in verbal, so that those are the authorized persons which are entering in the premises of a particular business or home or whatever it may be. Who are the invitees? Invitees are the customers. Customers are not the licensee because they are not given a permission in writing or verbally, but customers are the persons who are the invitees. Invitees doesn't need any invitation, but they are entering in the shop to have to buy certain things in the shop because those shops are named as per their business trade. So one person wants to have a mobile, there is a mobile shop. When the customers entered the particular shop to buy a mobile, those are the invitees. Those are the customers entering into the shop. The ticket holder in cinema hall, those are the invitees because they have purchased a ticket to see the cinema. So these are certain nomenclature or classification of persons in case of liability insurance. Now here, now the phrases and the definitions or the examples are certain tricky one, or it is it may be somewhat difficult to understand, but I will try my level best to convey you the best of the example so that while giving the examination, you will give the correct answer at that point. Now, onus of proof of negligence. What is onus of proof of negligence? Whenever the liability comes in picture or liability takes place, the burden rests with the person who suffered injury or damage. This is called onus of proof of negligence. That means the person who has suffered injuries or damages, the burden of proving such type of injury or damage because of the negligence of our insured rests with the person who has suffered the injury. That means when I'm saying there are three parties in liability, one is insurer, the other one is insured, and the third party or the third person is the person who has actually suffered the injury. So the person who is suffering from the injury or the damages, he has to prove that it is because of the negligence of the insured which has taken a policy with insurance company. So this onus of proof or the burden rests with the person who has suffered the injury. Res ipsa locutor. This is a phrase. Generally, it is coming in all our liability books and liability manuals. What is this res ipsa locutor? Things speaks for itself. When I'm discussing that the onus of proof rests with the person who has suffered the injury, the other term says that things speaks for itself. That means the burden, though it rests on the person who has suffered the injury, because of certain things or because of certain accident, which speaks itself that yes, there was negligence of the insured and then the insurance company is liable to pay. So things speaks for itself. I will give you one simple example. In a high story building, there are certain pots of plants which are located in the balcony, and one of the person who is going from the ground, he suffered the injury because of that particular pot which is there on the 10th floor. By falling off that particular pot, the person is injured. So that person is injured because of that particular pot, the clay pot, and due to that he has suffered head injury. Here, whatever are the accidental things, those things speaks for itself. That means the particular pot, the clay pot, has fallen down because of which the injury is sustained. So the society, maybe the house owner, is liable to pay the compensation or the legal liability will come in picture. So here, though the burden rests with the person who has suffered the injury, because of these things or because of this accident which is it can be speak for itself. That is, the evidence will be there wherein that clay pot has suffered the injuries to the person who is going from that ground to the gate, and these things are speaking itself that the liability is with the society or with the house owner. So these are the example, but still the onus of proof rests with the person who suffered injury. Now the damages, when we are discussing damages many times, what are the damages? Damages are nothing but the pecuniary compensation awarded by the court. So damages are nothing but the compensation, the amount, the monetary amount which is compensated, and those are awarded by the court. So court is awarding the pecuniary compensation. There are two types of damages. You must have come across these type of damages when you have discussed third party, that is third party lecture or MACT cases. So special damages and general damages, you all know, because if you are dealing in motor subject in your examination, you are already acquainted with this special damages. What are these special damages? Special damages are the actual damages, and general damages are the damages which are not actual, I will say, because the special damages are the actual damages which are the medical expenses, the funeral expenses. So these are actual damages which are termed as special damages, whereas the general damages are not the general damages but the special damages. Now, what is the difference? Special damages, what are the damages which are paid? Actual loss of earnings, medical expenses, funeral expenses. So here you can establish the damages by way of, say, a receipt or invoices or bills, that those damages can be established. So these are the actual damages. Whereas the general damages are the pain, sufferings, and distress. So pain, sufferings, and distress, you cannot count it. You cannot have the bills, you cannot have the invoices, but they are termed as general damages. Loss of enjoyment of life, yes. After certain accident or after certain liability claims, there will be loss of enjoyment of life, and that cannot be counted. But still, the person who has suffered the injury may sue our insured person in the court of law to pay loss of enjoyment of life in future. Loss of reduced expectation of life. What is the difference between loss of enjoyment of life and loss of reduced expectation of life? Loss of enjoyment of life means the person, before suffering the injury or before having this particular type of accident, he could have enjoyed the life as he was before the loss or as he was before the accident. He might have enjoyed the life with his family, with his friend, so that the enjoyment will continue till the end of his life. Wherein due to accident, there the loss of enjoyment of life is so much that he is unable to enjoy the life, and the sufferings are there. So he will sue our insured in the court of law. What is loss of reduced expectation of life? The loss of reduced expectation of life, that means if the person is suffering from the injury, say at the age of 35, and he is say administrative officer in the insurance company. So after the loss, after the accident, his expectation of life will be reduced. He may may not be promoted due to his maybe his inability, maybe his disability. So this is again reduce the expectation of his life during for his career, as well as due to the accident. If he could have enjoyed his life up to say 80 of the years, it may come down to 70, 65, whatever, because of the accident. So if the injury is so much that the expectation of life is reduced in a number of years, that is also to be counted under general damages. So these are differences between special damages and general damages. To better understand, special damages can be established by the invoices, billing, or the receipts, whereas in general damages, the general damages cannot establish by way of invoices or bills, but those are the sufferings or distress or loss of enjoyment of life from the victim or from the person who has got the injuries. Now defenses. What is meaning by defense? Defense meaning whenever there are allegation of negligence. Naturally, legal liability will come in picture if there is any negligence from the insured person. So whenever there is any negligence by the insured person or from the insured person, the liability will come in picture. So first of all, these negligence are to be proved, and negligence will be registered by way of defenses. Now, what will be the defenses? There are certain defenses we will discuss. First defense we are discussing is voluntary non-fit injuria. These are certain phrases, but to better understand, to whom is willing, where there can be no injury. What is the meaning of this voluntary non-fit injuria? When we say that there are certain defenses, it is not that in legal liability claim, the negligence is conveyed or it is brought into the notice by the person who has suffered the injury and it is paid. It's not like that. If the negligence is given or it is shown, if the negligence is shown from the insured by the person who has suffered the injuries, the negligence cannot be easily accepted by the insured person. Naturally, the insured person will not easily accept the negligence because those negligence have to be proved. Those negligence have to be proved by under the court of law. And for proving these negligence, the defenses will be taken from the insured as well as the insurance company if they are party to it. So what are defenses? First defense, voluntary non-fit injuria. I have given one simple example of car race spectator. So here when I'm saying that, or when we are discussing to whom is willing, there can be no injury. What is the meaning of this term? To whom is willing, there can be no injury. The example is car race spectator. The spectators which are coming to see the race, a car race, they are coming, they are buying a ticket and they are entering into that particular premises where the racing is going on. So here, to whom, that means the spectator is willing to come to see the car race, there can be no injury. That means there should not be any injury, or if any injury occurred to the car race spectator, that will not be termed as a legal liability case, and the defenses can be taken from the organizers as well as the insurance company that once the spectator is buying a ticket to see the car race, he knows that there may be injury if it happens. So when I'm saying to whom is willing, there can be no injury. The other term mean to say those who are entering in certain premises, they know that there may be certain type of injury that may cause to the spectator, wherein they cannot go against the organizers for the negligence. They themselves are coming to see the car race. I will give you a simple example of IPL matches. Now the IPL matches are going on, and during the IPL matches, all the these hard hitting strikers, the batsmen, they are hitting the ball and that goes in the stadium. If we are watching these type of matches and if that particular cricket ball hits to the spectator, and if the spectator goes against the organizer stating that yes, I have suffered injuries because of that ball which is hit by that batsman, so you are liable to pay the claim. So here the defenses what is available, or defenses which are taken by that organizer and in turn insurance company, are by way of voluntary non-fit injuria, which says that to whom is willing, there can be no injury. So these are the defenses, and the insurance company as well as the insured takes the defense by way of voluntary non-fit injuria. Second one is inevitable accident. What is inevitable? Inevitable means in spite of all the precautions. In spite of all the things which one ought to do, the accident or the injury may occur or may happen to other person. Here I have given one simple example of brake fail of car. Now, Mr. ABC has taken all the precaution for maintenance of his car. He has done his maintenance. He is having a proof, that is a bill from that garage wala or the showroom, that 2 days back only he has done all the maintenance of the car. Still, there is a brake fail, or the brakes are failed while running of that car, and due to which the accident occurred. One person is injured due to that accident. What will happen? The injured person will sue the car owner in the court of law. In the court of law, our insured person as well as the insurance company will say that, okay, the injury is there to that person, but still the car was very well maintained. There is a proof, and the accident was inevitable. It is not because of the negligence of the car owner, but it was inevitable. Suddenly there was a brake fail, and due to this brake fail, the car owner is unable to stop the car, and it banged that particular person who is suffering from the injury. Now, what will happen in the court of law? Due to such type of defenses, though the amount of compensation will not come to zero, or it will not be nullified, but definitely the amount of compensation will be reduced. The amount of compensation will be reduced because you are giving the defense of inevitable accident. Inevitable accident means the negligence from the car owner was not in picture, but it is because of the brake fail of the car, the accident took place. In spite of all these things, there may be compensation, but this compensation will be of a minimal value. That will not go to the high value. So the defenses are very important in legal liability, and these type of defenses are taken by the insured as well as insurance company. The same way, when we are talking about inevitable accident, act of God, we all know, due to storm, earthquake, lightning, etc. So these are the act of God perils. So because of these act of God perils, if any injury occur to a certain person, say for example, in a particular business premises, the visitors have entered, and due to earthquake, the building is collapsed. Naturally, the person who is suffering from the injury in the business premises, they will sue the entrepreneur in the court of law to pay the damages or pay the legal liability amount. But here, the defenses taken from the insured as well as insurance companies, that earthquake is not in the capacity, or the insured person, the entrepreneur, is unable to stop such type of act of God perils, and due to this type of act of God perils, there is injury to the person, and he is claiming that there must be some compensation. So these are some of the act of God perils which will take part of defense procedure, and the amount of compensation will be minimized. Emergency, again, what is meaning by emergency is that, suppose if there is a fire in a certain place, that is say a factory or business premises. If there is a fire, if the visitors are entering in the premises, there is emergency to save life. So while saving life, if the other person is injured, still there will be liability. But this liability will be, or it will come down, because the situation of emergency, the situation of crisis were there was fire, and to save one's life, the insured person or maybe the employees, they have run away, or they were running away, but still the injury occurred to the person who is the visitor, or who may be a third party. So those third party, when they are suffering from injuries, they will sue the our insured, but insured will take the defense that the situation was of crisis, situation was of emergency, due to which these injuries have happened. So this emergency is also defense. Now, contributory negligence. This is also defense. This is very important because due to contributory negligence, the compensation is reduced. How the compensation is reduced in case of workman's compensation policy, and if the workman is suffered from the injury, definitely there will be legal liability in question, and the workman will ask for compensation from the owner. But when it is written in factory premises that while working, the workman should wear safety belt, and those safety belt are not worn or those are not with the workman and the accident occurred, whether the claim will be paid or not, or the compensation will be paid or not, the compensation will be paid according to the court of law, but the compensation will be reduced. Why? Because if the workman would have taken the safety measures of wearing the safety belts, the accident, though it has happened, it would have or it would have imparted small type of injuries or minimal injuries to the workman, so that there is a contributory negligence on part of the workman. So workman, when he is asking for the compensation, he himself is also a negligent factor. So he himself was also negligent, not wearing the safety belt. So because of this contributory negligence from the workman, the compensation, if suppose it would have been 10 lakhs, it may be reduced to certain amount, say for 5 lakhs. It is not in proportion of that. I'm giving you the example only. But by having the safety belt, workman may not have suffered the injury, or if he would have suffered the injuries, it would not be on a large scale. So there is negligence on part of the owner, but equally the contributory negligence is on part of the workman also. So the compensation amount will be reduced by taking this type of defense. Now, contracting out. What is this contracting out? There are certain contracting terms or contract terms which are given at the inception of any contract, wherein you should abide, or the person who will be suffering any injuries, damages, or property damages, they ought to know what are these contracting points or contracting terms. Likewise, in our airline or in our passenger, when we are traveling as a passenger in airline, behind those airline tickets or the state transport tickets, it may written that whatever are the baggages, those baggages remains under the sole responsibility of the passenger. What is the sole responsibility of the passenger? Though the baggages are carried out or they are carried through the airlines or the modes of travel, if there is any loss to the baggage, or if there is any theft or the baggage have been lost, it is the sole responsibility of the passenger. What is the meaning of this? Whether any damages or whether any compensation is paid or not, still the compensation may be paid, but this type of defense will be there, and the negligence, though there is negligence on part of the insured at the inception only has stated in a contract that the baggages which are there along with the persons who are, or the passengers who are traveling, those are the sole responsibility of the passenger. That means it is the responsibility of the passenger to keep safe those baggages which are accompanied with them. Still there will be claim, but because of these defenses of contracting out, the compensation will be reduced. Limitation, time barred. Yes, there are certain limitations, that is after a certain time barred or after a certain time, these negligence, though they are there, that cannot be compensated, or those cannot be in the court of law will come because of this time barred situation or the limitations. Accord and satisfaction, cannot reopen once satisfied or once settled. In our civil wrong, when we were discussing about probabilities, that the insured, the person who has suffered injury may think that whatever compensation I am agreeing to it are not correct, and I may file a case afterwards also. No, it's not like that. Once the award is given, it is satisfied, then it cannot be reopened once it is satisfied or once it is settled. That means once the voucher or maybe a consent given by that person who has suffered the injury, once he has given the consent that I am accepting this amount of liability towards my injury, he again cannot go or cannot reopen his file and say that whatever I have received is not up to satisfactory and I want to have some more compensation. So these are the defenses. Various laws, there are certain various laws under legal liability policy. These are the laws: fatal accident law 1855, the law of strict liability, law of absolute liability, law of limitation. The law of limitation says that there is a timeline of 3 years in India for legal liability case. So the legal liability cases, what are the timeline or what is the limit of law of limitation? Those are 3 years. So if there are any injuries, if there are any cases to be filed in the court of law, the timeline is 3 years from the date of actual accident. So within these 3 years, the legal liability case is to be registered. So these are the law of limitation. Directors and officers personal liability, Statutory Liability, Public Liability Act 1991. After that Bhopal gas tragedy, this Public Liability Act came in picture. Consumer Protection Act 1986, yes, it is commonly termed as COPRA, COPRA. This Consumer Protection Act, there are certain district forum, state forum, national forum, and their jurisdictions, and the amount of quantum or the quantum is specified for particular jurisdiction that will deal in. These are the redressal agencies. There are district forum, state commission, national commission, and then the supreme. What are the limitations? The district forum, previously the complaints up to 20 lakhs, I think it were there. From December 2021, certain amounts are being increased according to the forums. I request all of you, though I have given these type of amounts here, which are after December 2021, but you...
Correct.
Hello?
Sorry, for district forum, it is, I think, 1 crore, no?
No, here, that's what I am conveying you.
No, it's 50 lakh only.
Though I have given you this, you just check it up with your legal hubs, legal your departments, because these are the terms or these are the compensation which are newly awarded. Because in the month of December, that is after 31st December 2021, these certain amounts are being specified. These are correct one, but still I request all of you to please refer to your legal hub for the correctness of these amounts. Because previously for district forum, it was 20 lakhs, but now after 31st December 2021, it has come to 50 lakhs. So complaints up to rupees 50 lakhs, if they are to be registered, they should go to the district forum. Above 50 lakhs, but up to 2 crore, the state commission will come in picture. So the complaints between 50 lakhs, but up to 2 crore, the consumer agency or the redressal agencies will be state commission. What is the meaning of this particular amount and the commissions or the district forum is that the amount of compensation or whatever amount the person who is getting the award, if those if they want that, they want to have the amount of say 40 lakh as a compensation, the redressal agency for particular 40 lakhs will be district forum. But suppose if the amount is say 1 crore 20 lakh, then the dispute or the redressal agency will be state commission. And if those are complaints are above 2 crore, that will go to national commission. These are the correct amount, but still I request all of you to approach your hubs so that this will be the correctness will be taken into consideration from your end. The time for, yes.
ये redressal agency के अंदर individual जा सकता है या कोई firm भी जा सकती है?
Redressal agencies, this consumer forum, actually the individual persons are going. That means the individual persons can go to the ombudsman, but the individual person as well as the corporates also can go to these type of forum. For ombudsman, only the individual person can go, but for this district forum and state commission or national commission, anybody, individual as well as the any of the corporates, they may go to the these forums. That is there. Time limit for filing complaint, 2 years from the date of accident. So this is a time limit for filing complaint in these redressal agencies. What is that? It is 2 years from the date of accident.
Sir, excuse me.
Yes, sir.
Sir, it is the date of accident or no claim from the date of no claim by the company?
The time limit is 2 years from the date of accident, sir.
But sir, I think so. It is 2 years from the no claim of the company or the office.
2 years from the date of accident. Okay, that means you.
Sir, it is 2 years after the date of reputation or the letter given by the company.
Okay. That has to be there, because that redressal will come once the amount of compensation is not paid. So here the 2 years limitation for filing complaint is after certain award which is not given or which is not being paid, and after that these 2 years of timeline will be there. So definitely after the date of incident. So after the date of incident, that means the date of actual compensation which is not payable. Not the accident, but the date of incident of the compensation not paid by the insurance company or maybe the insured person. So here, yes, as pointed out by the participants, the 2 years from the date of accident will not come in picture, but 2 years from the date of non-given or the award or whatever the amount of compensation which is not given or claim is not settled, from that date, the particular person, the injured person, can go to district forum. That is from the 2 years from the date of refusal, one can say. Correct?
And timing of appeal, sir, from district forum to state and state to national commission or national commission to Supreme Court.
Yeah, the time limits are varying. The time limits from district to state commission, I think it is 30 days. From state to national, it varies. The certain things you try to get it from our institute book, because at the highest level from national commission, it is 90 days, but at the basic level, it is 30 days. So that you try to get it from the books, because they are at the district to state, it may be 30, but afterwards, that is from national level, national to Supreme Court, or from state to commission, it is 90. But you confirm yourself from these books of Insurance Institute. Now these claims made versus losses occurring. So there are certain coverages, limits of coverages under claims made basis and losses occurring basis. Here one line I have put in, which is very important. Liability policies are normally termed as long tail policies. What are the long tail policies? That means the actual accident or actual incident which has taken place, that will be in a certain year of the policy, whereas the claims will be made after 2 years or after 3 years or maybe after 1 year. So there has to be a policy in force at the time of accident, as well as there should be a policy in force at the time of lodging of the claim. So these policies are called as long tail policies. Liability policies are normally termed as long tail policies. The limits of coverage, claims made basis and losses occurring basis. So what is the difference between claims made basis and losses occurring basis? Normally our policies are claims made basis. Normally in India, we are issuing policies which are on claims made basis. So what is difference? First difference regarding limits of coverage, loss must occur and be reported while the policy is in force. If retroactive period, loss should occur within that period. So you know this retroactive period and the retroactive date, that is once the policy is issued in the year 2021-22, say for example 1st of August 2021, the renewal will be in the month of August 22 to August 23. That is 1st of August 2022 is the first renewal. But here the retroactive date mentioned in the policy is 1st August 2021. So the insurance company is liable to pay the claim, though not discovered during that particular policy of 2021 to 2022. But still, if it occurs or the incident happened in the last year's policy, but the actual claim is lodged in the next year, that is 2022-23, this retroactive date will play the important role, and the losses, if any, will be paid through this policy. But here, when we say claims made basis, what is the limit of coverage? The loss must occur and be reported while the policy is in force. So while the policy is in force, meaning the policy should be there in existence. Though the previous policy is over, it is expired, still the next policy, that is the renewal policy, is in force, and the retroactive period is taken into consideration while paying such type of legal liability claim. So loss should occur within that period. So within that retroactive period from 1st August 2021 till the expiry of the next year policy, there has the loss should occur and it will be paid in the subsequent year of the policy. Then what is the difference between claims made and losses occurring? The loss must occur while the policy is in force, but it may be reported at any further time. Here, the meaning of losses occurring means once the policy is issued, the liability policy is issued, and if the insurance company is accepting the losses occurring basis, then if the policy is expired also and it is not renewed, but the actual loss has happened during the policy wherein, say for example, 1st August 2021 to 31st of July 2022 is the policy period. The loss has occurred during that policy period, but the next year renewal policy is not there. There is no policy in force next year, but still the loss is reported after the expiry of the policy. That means there was loss actually in that policy of 1st August 21 to 31st July 22. Say for example, the loss has occurred in the in December 2021. Whether that loss will be paid? Yes, if the losses occurring basis is accepted by the insurance company and the policy is not renewed also, the losses are to be paid. So generally in India, we are giving policy on claims made basis, wherein the retroactive date, retroactive period is mentioned, and due to this retroactive date, there has to be a policy in force at the time of loss, and there has to be a policy in force at the time of claim payment. So this is the difference between claims made basis and losses occurring basis. Second one, extended.
sir.
Yes.
सर रेट्रोएक्टिव पीरियड के अंदर अगर कोई दो पॉलिसी के बीच में अगर कोई गैप आ जाता है,
हाँ,
रिन्यूअल इन टाइम नहीं होता, तो रेट्रोएक्टिव पीरियड के ऊपर उसका इफेक्ट पड़ता है?
यस, पड़ता है। रेट्रोएक्टिव डेट एक्चुअली अगर रिन्यूअल इन टाइम पे नहीं हुआ और रेट्रोएक्टिव डेट अगर इंश्योरेंस कंपनी ने एट द टाइम ऑफ रिन्यूअल नहीं एक्सेप्ट की, तो what will happen? The retroactive date at the time of next renewal from the date of issue of the policy, if it is accepted by the insurance company, then naturally the claim in the previous policy will not be counted. It will not come in picture. And generally,
ऐसा भी कुछ है कि 30 days तक अगर टाइम रिन्यूअल
yes,
हो जाए,
there is a time period. See, it is up to the discretion of the insurance company that insurance company may waive certain period. That is with that rests with the insurance company. See, if at all the renewal which we are talking, which we are discussing of 1st August 21 to 31st July 2022, if the renewal comes in the, that is the expiry is in the month of July, if the policy is renewed next August 22, 25th of August 22, that is after 25 days, and still if the insurance company considered the retroactive date, considering the valued client or maybe certain categories or certain terms regarding that particular client, if there are any losses which are there in the previous policy, that can be counted. Also, if there is a gap between this particular from 31st July to 25th of August, if any accident occurs during this time, that retroactive period will be counted or not, that rests with the insurance company. But to better understand, we are renewing the policy. See, any insurance company will not take such type of liabilities, or if they want to take such type of liabilities, they will be sure that the client is valued client. There will be certain parameters to issue such type of retroactive date or period if there is any break under the policy. But in common term or for any decisions from insurance company, the renewal should be before expiry of the policy. The 30 days waiting period or maybe 60 days period, if it is counted, though 30 days period is prescribed, it is not fixed or it is not binding on the insurance company that yes, within these 30 days, insurance company has to renew the policy, and whatever are the claims which are there with the help of retroactive date, insurance company has to make good all those losses. It is not binding on the insurance company, and insurance company may refuse such type of retroactive date. Okay, sir.
Ji sir, thank you.
Extender reporting or tail coverage. What is the meaning of this phrase? We'll discuss. Purchasing of extended reporting coverage will ensure future claims will continue to be covered. That we are discussing. Purchasing of extended reporting coverage will ensure that those future claims will continue to be covered. That means those extended reporting coverages, whatever policies are extended according to the claims made basis, the future claims, if there are any, those will be that will ensure that it will continue to be covered. But here, whatever are the policies under the claims made basis, it has to be continuously renewed. So it has to be renewed by way of renewal and by way of paying the premium. Whereas in losses occurring, what will happen? No extended reporting coverage is needed. As I told you earlier, if there is a claim on the policy, if they have not purchased the policy or they have not taken the policy in the next year, still those claims are payable. So for losses occurring basis, no extended reporting coverage is needed. But yes, for claims made basis, the renewals has to be there, and there has to be policy in force at the time of claim as well as at the time of actual loss. That is called as claims made basis. What is the cost? Cost under claims made basis is initial premium, and renewal premium is lower. Why the renewal premiums are lower? Because it is assumed that there is no claim during the last year. So it may continue, and if there is any claim afterwards discovered or it is lodged, then what will happen? Subsequent renewal, the premium may be loaded. But here at the initial stage, certain amount of premium is to be paid by the insured, and after the at the time of renewal, that is after the expiry of the policy, the next year premium will be lower. Some discounts will be offered. But whenever there is any claim which is lodged under a policy, the next renewal may be loaded by certain percentage. That is under claims made basis. But here in case of losses occurring basis, the initial premium has to be on a higher side. Why it has to be on a higher side at initially? Because the insured person, if there are any losses or it is up to the insured person that he may take the policy or he may not renew the policy after the expiry. So here there has to be, if there is any claim, you have to pay the claim though the policy is not renewed. So to meet these type of expenses, the insurance company should give the premium on cost high basis. So this is the difference between claims made basis and losses occurring basis.
Excuse me, sir.
Yes.
Can you explain claims extended reporting or tail coverage with example? Claims made basis.
Claims made basis, I have already told you that if the policy is issued from 1st of August 2021 to 31st of July 2022, there is a claim, there is an incident, there is accident in December 2021. Okay. The December 2021 accident, that may not be the motor accident, or it may be certain negligence which has happened in the month of December 2021. But the repercussion of that particular incident or negligence will come in picture, or the victim or the person who has suffered the injury due to that particular incident in December may sue our insured person in the court of law after, say, August 2022. That is after the expiry of the policy. Our insured person is unable to know what negligence has occurred from himself. He is not aware of any such type of negligence during the currency of the first policy, that is August 21 to July 22. That will come in picture once the victim or the person who has suffered the injury has lodged a complaint in the court of law or the authority stating that there is a negligence of the professional while performing certain duties in the month of December 2021, because of which there were losses to me and I bond the compensation. So our insured person will come to know the negligence occurred by himself or herself only after the expiry of the particular policy. So definitely he will intimate to the insurance company after the expiry of the policy. And here the loss has occurred in the month of December 2021, but the actual intimation or the claim lodged is in the month of August 2022, that is the expiry of the first policy. So here, since the policy was in force where the actual negligence has occurred, and also when it was reported or it was intimated, at that time also the policy was in force. So these policies are called as long tail policies, where the losses or the negligence might have occurred during a certain policy period, and the claim may be lodged after certain period or after the expiry of this single policy or maybe the next policy, because the victim or the person who has suffered injuries will come to know that these injuries were suffered because of the negligence of that particular person, himself or herself, at that point of time, that is in the month of December 2021. So though the incidents has occurred in December 2021, it has come to the notice of our insured person, that is our proposer, in the month of August 2022, that is after the expiry of the particular policy. Still those claims are payable on claims made basis, because the policy was in force at the time of incidence, as well as the policy is in force at the time of claims made.
Yes, sir. Got it, sir. Thank you, sir.
Now there are certain liability policies.
Excuse me, sir.
These are, yes.
This is about the extended reporting. Supposing if the claims made policies are renewed continuously without any break,
Right.
then there is a question of extended reporting.
No, that means there has to be a policy in force. That is, they have to take the policy because this extended reporting coverage will, what it will say, that the example which we have discussed right now is also because of the reporting or the reporting of those lodging of the complaint will be in future, whereas actual incidents has occurred previously. So these type of extended reporting or tail coverages are there under claims made basis policy only. So here, when the policy is renewed continuously, then only the claims made basis will come in picture. Otherwise, the losses occurring basis, what will happen in the same incident, if insurance company has issued a policy or the terms accepted are of losses occurring basis, what will happen to the claim? The claim has to be paid by the insurance company, though the policy is not renewed, because the extended reporting coverage is not needed at all in losses occurring policy. That means no further renewal or no further policies will be in force, but the loss, since it has occurred during the currency of the policy when the policy was in force, but it was reported afterwards, still those claims will be paid if the insurance company accepts losses occurring basis. Here it is given that no extended reporting coverage is needed. Naturally, because when we are accepting losses occurring basis, there is no need to have this extended reporting coverage. But yes, for claims made basis, extended reporting coverage has to be there to confirm that the policy is in force at the time of claim reporting or claim intimating, and it was there at the time of incidence also. So this is the
Thank you,
difference.
sir. Thank you, sir.
Now, liability policies, there are certain policies, Public Liability Act policy, this is universal. So you must study this Public Liability Act policy, because there may be question with regard to any of certain policies wherein all the GIPSA companies are abiding the same principles. So in Public Liability Act policy, you all know that these are the policies after Bhopal gas tragedy, the Public Liability Act 1991 that comes in force. These policies are effected after 1994. The ratio here, when I have discussed with you certain ratio, the ratio this we have discussed, but in case of Public Liability Act policy, what we are discussing right now, the limit of AOA is to AOY. It is fixed. The insured will not propose, or the insurance company will not give the leverage to the insured to choose these type of ratio. But the limit or the ratio is fixed in case of Public Liability Act, and it is 1:3. Accordingly, the amount of compensation or the limit of AOA is also fixed to the maximum, that is 5 crore, and AOY limit is also fixed, that is 15 crore naturally, because the ratio is only 1, that is 1:3. So here, in case of Public Liability Act policy, one should know that the ratio is fixed at 1:3, and the maximum compensation, it may be asked in your examination, what is the maximum amount of compensation will be paid under Public Liability Act policy? What is the maximum amount of compensation? So maximum amount of compensation to be paid is, AOY limit is 15 crore. So 15 crore is the maximum amount which will be paid. But under AOA, it is 5 crore. So you should know these type of a tricky question if those are asked in your examination. So maximum, because 5 crore is AOA limit, but the limit of compensation which is maximum paid will be 15 crore. So in Public Liability Act, it may happen that the compensation under one incidence may be paid of say 4 crore. In the second instance, it may be paid say 3 crore. So what will be the maximum compensation to be paid in case of Public Liability Act? That will be 15 crore. So if you are giving answer of 5 crore, you may lose 1 mark. So this is a basic difference when you are solving any questions in your examination. So Public Liability Act, certain injuries compensation, the death compensation, those are awarded under the act, that is by the statute or the law. Likewise, Public Liability Industrial Policy, in industrial policy, yes, the manufacturing units are comes in picture. So industrial meaning manufacturing units only. So if those are not manufacturing units, those will come under non-industrial thing. So but still under industry, the warehouses, the storage premises, that will be part of the industrial policy, whereas in non-industrial units, those which are not related to the industry or manufacturing or warehousing, like general cinema halls or any of the garden, public places, all these places wherein the public are having access as visitors, those are termed as non-industrial. The clubs, the many of the auditoriums, those will come under non-industrial policy. But here the ratio will vary from 1:1 to 1:4. So that we have already discussed. Then comes products liability policy. There are these policies. What I'm explaining you. You can very well refer the books because it is again a vast subject. I will give you the brief idea because I cannot sum up all the things in one lecture. But regarding product liability also, if there is any liability which occurs due to use of the product liability policy will come in picture. There are certain jurisdictions under these type of policies, that is the Indian jurisdiction, other than USA Canada jurisdiction, and including USA Canada jurisdiction. What is difference between these three jurisdiction is that the highest amount of compensation, or you may say the highest amount of award, will be paid if that is USA Canada jurisdiction. If it is opted and if it is accepted by the insurance company as USA and Canada jurisdiction, what will happen? The awareness of these type of liabilities is very well in USA and Canada, and it may happen that the claims, if any, will be more in if the jurisdiction given is USA and Canada, wherein the amount of liability when we are paying, those will be in dollars. If we accept the USA and Canada jurisdiction, the amount of liability which will be paid will be in foreign currency. So it is very important when we are issuing any type of policies of liability, we should know that which type of jurisdictions we are allowing. So for other than USA and Canada jurisdiction, the liability policy will fetch lesser number of claims, as well as the liability will not be huge one as compared to the USA Canada jurisdiction. Regarding product liability policies, there are certain product liability norms. There may be a recall of the product. There are certain extra additional coverages which are given under product liability policy. But what we should know regarding product liability policy is that by the use of the product, when the consumer, the customer is suffering from any of the injury, or it may happen because of the use of the product, the actual the material which is used will not give its result to that maximum level which is being advertised by the company which is manufacturing that particular product, then the liability may come in picture. So these consumers, these customers, they may sue the particular company in court of law for payment of the compensation. Generally, product liability policies, the foods, the beverages, or the cosmetics are treated as the highest degree of risk regards to product liability. So this is to be understandable, and one should know that which type of products to be taken for liability policy. Say for example, if machineries are there, if the metals are there, then the liability coverages will be, or the chances of liability claims will be much lesser as compared to the food or beverages or the cosmetics, because for the foods and beverages, the consumption of all these products are, or the intake of all these products is commonly taken and it is used, and there will be direct impact on the bodily injury or death to the consumer. Likewise, for the cosmetics also, these products are used in large number, and if the desired results are not obtained, then the products or the particular businessman will be sued in the court of law. The next one is professional indemnity. You all know professional indemnity. It ranges for the professionals of doctors to the architects, engineers, lawyers. So if any negligence on part of these professionals occurs, then their professional career will be tested, or the liability will be against these professionals. These professionals have to pay the compensation, and if they have the professional indemnity policy with the insurance company, those amount of compensation or awards are paid by the insurance company, and professionals are insured against these type of negligence. So there may be various examples for these professionals while performing the duties. It may happen that there may be negligence on part of the duty. So if this negligence is proved in the court of law, definitely this negligence has to be proved in the court of law, then only professional liability will occur, and in turn insurance company will pay the claim. If the negligence is not proved, yes, this is very important point for all the liability policies, the negligence has to be proved, and once it is proved in the court of law, then only the insured will pay the compensation or the insurance company will come in picture. The employer's liability policy, we all know now this WC nomenclature is changed. Now it has comes to employees compensation, EC, and all the employees under particular factory or whatever is the organization, those employees, if they suffer any injury whilst on duty and they claim the amount against the employer, the insurance company will come in picture. Again, here the WC commissioner, the employees compensation commissioner, they will give the award, and on the basis of the award, the claims are paid. The claims are paid directly to the person who has suffered the injury, or maybe to the legal hires in case of death. So it may happen that the claims are paid to the WC commissioner, and in turn, the amount of compensation will be given to the employee or the legal hires. Likewise, the directors and officers liability policy, it is same and nothing but the professional indemnity policy, but it is actually the negligence on part of performing duties in a company for the directors and officers, though they are not the actual professional by the nomenclature, but they are the directors and officers in a particular organization, and they have given fixed responsibilities, fixed duties to perform in regard to the organization. But if they fail to perform the duties, or if there is any negligence, or if they fail to perform the duties according to the duties which are described under the organization, and if there is any liability, if there is any claim come, then this directors and officers liability policy will come in picture. So these are a certain type of liability policies, and for details you can go through the books. Now the time is short, even the examination is approaching because it is on the 30th of April. So here we'll conclude our liability section. For all of you, I will share certain questions which I will be giving, maybe some 30 questions, one question said to our organizers, and they will give you on the Telegram, so that it will be better for you to solve the paper. If at all it is possible, I will try to give you 2 question sets, but definitely one question set will be shared tomorrow with 30 questions, so that it will be easy for you to understand the miscellaneous portion, or the miscellaneous question, if what type of questions are appearing in the examination. So here, if you are having any difficulties, you can come out with the difficulties, or otherwise we'll close our session for today.
Excuse me, sir.
Yes.
सर एक क्वेश्चन है, जैसे कि
Yes.
प्रोफेशनल इंडेमनिटी पॉलिसी आपने बताया डॉक्टर्स और इंजीनियर के लिए है,
हाँ,
ऐसे ही कोई बैंक में मैनेजर या इंश्योरेंस कंपनी में मैनेजर है, क्या उसके लिए भी हो सकती है?
नहीं, that directors and officers liability is there, na?
Okay.
See, so officer, and nowadays what is happening, this many of the cooperative housing societies in major metro cities, these cooperative housing societies, they want a policy of their committee members, the managing committee member. So it tend to give this type of policy, directors and officers liability, though they are not the professionals, but they are given certain duties in regard to the chairman or treasurer or secretary, and if they fail to give certain type of duties, then there may be liability claim which may occur. So this is particularly related to the duties, performance of the duties as regard to the organization. So when it comes to organization, we can issue directors and officers liability policy. Okay, so we'll stop here. I will share the question set tomorrow on Telegram. So the participants who are not on the Telegram may contact the organizers so that it will be accessible to you, and you will get that question set by tomorrow. Thank
Sir,
you very
I
much.
have a question in personal accident
Yes.
policy.
Yes.
Sir, there have written in the book 2% of sum insured for weekly carriage of dead body, or rupees 2,500, whichever is less.
Right.
Whereas it has been written in ready reckoner 25,000.
Yeah, that actually, madam, we discussed in the first session itself that the amounts which are given in our books or maybe ready reckoner, maybe for New India Assurance, it may change to some other insurance company. So if the amounts are not fixed particularly, then those will not be asked in the examination. Because it may happen, see, personal accident policies or all type of miscellaneous policies are non-tariff policies. So when they are non-tariff policies, that means it is the discretion of the insurers to design certain policies according to the nature. So this carriage of dead body 2% or 2,500, whichever is less, or 2% of the sum insured or 25,000, whichever is less, it may vary also from company to company. But since you are giving the examination of GIPSA, you should not go in detail about the amounts if they are not exact for all the insurance companies. When we are discussing about Public Liability Act, since the Public Liability Act is fixed by the government of India, that is by the law of land, it is fixed for all the companies. Then you have to make sure yourself that you know the amounts. But in case of certain non-tariff policies, the amounts are not having that much important. But at the time of your actual working, those amounts are important.
Okay, sir. Thank you, sir.
Thank you. So we'll conclude here. Thank you. Thank you very much for the patient listening.
Thank you, sir. Thank you.
Thank you so much, sir.